Good morning, everybody, and welcome to the Siler Wealth Management video blog. It's a Tuesday morning edition, and we are anticipating some earnings out of Apple. And of course, this is earnings season. And as of last week, 172 of the S&P 500 stocks, 500, okay, have reported earnings. And for the most part, earnings have been up slightly over 2% on sales or revenues that were down a little bit less than 2%. So let me explain why earnings are so important, okay? Because when you own a stock, you have ownership in that stock. You're not lending them money. You're not owning it a right to buy that stock. You actually have ownership in that stock. So what drives prices of stocks? Well, earnings and or anticipation of earnings. I mean, a lot of biotech stocks out there don't have any earnings because they're out there doing research and development. They're trying to come up with the next greatest drug. So they're not out there maybe selling it, but they're working on it. And the anticipation is that one day they're going to have fantastic earnings or sell the drug or something great will happen. So that's how they trade. So that's a different animal. But for the most part, any company out there you own, you hear about, it's all about the earnings. Okay, now what we've seen here, since I told you earnings were up slightly, and they're, for the most part, the majority, are coming in better than expected. However, normally we see about 69 to 70% of the companies come out better than expected. I think we're tracking a little bit below that. But the sales are down. Here's what's happening. S&P 500, the 500 largest companies in the world. They do, and most of them are multinational companies, so they do business overseas. We've had a strong dollar. That's affected their revenues and their sales, the money coming into them because our dollar is stronger. So what do they have to do? Well, earnings maybe up slightly, revenues down. So how do you achieve that? Well, it's cost cutting. And we really like to see earnings and revenues grow organically. But when you do it artificially, meaning through cost cutting, that sometimes can become a problem down the road. It's a short-term fix. So what we want to see is obviously, and it's not only increase in earnings, but it's what the analysts expect. And you'll see all the time on CNBC, analysts expected this company to come out with $1.50 a share in earnings. That means that for every share of stock, it's $1.50 in earnings. That's what that means. And if they came out with a penny below $1.49, chances are our stock's going to get hammered. And the inverse of that, if they come out with $1.51, $1.52, chances are stock's going to go up. That's the way it works. Now, of course, there's a lot of other elements involved in that. You know, the sales forecast and earnings forecast. They want to look at, hey, the next quarter we are lowering our estimate or lowering our guidance, or for fiscal year end we're raising guidance. That's what makes the market move. Now, the big earnings for today, Apple. They'll report after the close. So this is a widely anticipated because Apple is the largest company in the stock market. $700 billion market cap. That's what that company is worth. So what are they going to say? Nobody knows. Apple typically has fairly conservative guidance. Now, last week, the stock had a pretty good week. Now, all technology, and that's what buoyed the market last week. We had a good performance for stocks last week, but Microsoft came out and knocked the cover off the ball earnings-wise. That was widely unexpected. So Apple had a good week along with Microsoft and some of the other big technology names. So yesterday, the day before earnings comes out for Apple, the stock was down 3%. Normally, I would say, well, that may not be good news, but oftentimes we see Apple go up the day before earnings, and then when they come out, they say something that disappoints the street. Look, their bar is raised way up. All right, so the Apple bar is way up there. So anything that is little adversely affect could be iPad sales overseas. It could be the new iPhone 6 Plus. Now, I think that's doing pretty well. And of course, yesterday they launched pre-sales of the new Apple TV, not the actual screen Apple TV, but the little device and little box. And that's not going to have any effect on this quarter because that's going to be on effect for next quarter. However, that Apple TV is such a small event for the company, it will barely move the needle. So what we're looking for today with Apple, we're looking for them to say, obviously, iPhone sales and unit sales in the iPhone are great. It's going to be widely anticipated that going forward, China is going to be a major subject for Apple and see how sales are going there. But we'll see how the stock performs. Again, we have no idea. So would I buy Apple today before earnings or sell Apple today before earnings? No way. Nobody knows what's going on. So let's see what happens at the close of business, but they'll probably report about 4:15. Also later this week, you have a Fed meeting, And it is widely anticipated that the Fed will not raise interest rates at this meeting, however, a possibility in the December meeting. So we'll see what they say. They're going to give us a little bit of guidance as to, hey, you know what? We saw the market downturn. We're holding off another quarter, or of course the market has rebounded since then. So that'll be interesting, although rates are going up. We know this. We don't know if it's going to be next year. More than likely, next year they will go up, and then you have to adjust your portfolio accordingly. We are already adjusting our portfolios in anticipation of a rising rate environment. Lastly, I want to, we have had a lot of questions about annuities, and I guess a lot of people do own annuities, whether it be in their 401ks, because sometimes 401ks are annuities, or just annuity contracts they've had out there for years. And annuities have changed over the years, and there are a lot of moving parts to annuities, and we get people all the time come in and say, listen, will you please look at my annuity statement because I'm not sure what this means. And a lot of annuity, I'm going to call them salesmen, will tell the client, hey, it guarantees you growth in your portfolio for the next 10 years, et cetera, et cetera. Well, there are elements that guarantee some growth of income, but you have to take it as a stream of income, and it's very, very confusing. So my recommendation to you is dig up your annuity contracts. Let's take a look at them, and I will explain them to you because we know a lot about what's going on in annuities. And today's annuity is not like your father's annuity. A little bit different, and I only use annuities for income. That's what I use them for. If you're going to need income down the road, that's what they're used for. They're not for somebody that's 40 years old, wants to put some growth in there. And now, unless you are a high income earner and you're at risk of litigation, they are insulated and creditor protected. So that's